Good morning. Happy Father's Day. I'm Austrian Hispanic. I'm in front of the Watts Towers Historical Place, and I want to talk to you guys a little bit about the trade tensions that's going on in China and why you should put more focus into it. If we look at the play that Donald Trump is putting out there and putting tariffs on, essentially it's the American consumer, because at the end of the day, that's who pays the tariff. The manufacturer just passes it along to the everyday consumer. This is not something that's healthy for our economy. It's actually just another revenue source for the government. But on top of that, China holds all the cards. They have the infrastructure, they have the supply chain, they hold about 80% of production of rare earth metals. And on top of that, we just don't produce anything here in this country. And if we do, it's so expensive that the average consumer just doesn't have enough money to buy that product. So, we should just start having a more reasonable president, but have yourself be more reasonable by buying gold and silver. If we look at what's going on with our monetary policy, Jerome Powell has been talking about hiking interest rates for quite some time and then stopping the interest rates hikes. Now he's mentioning lowering interest rates. So in a normal economy, interest rates should be about 7, 8, 9, 10%. That's healthy. That's a robust economy. Businesses can pay off those loans, but in a weak economy they can't. So that's why we have lower interest rates. So that's indicative of the upcoming collapse of our monetary system, especially the reserve status of the dollar and emergence of other currencies. But not only that, but the return of gold as the gold standard, no pun intended. So don't get thrown off by cryptos, Bitcoin. I think even Facebook has a coin out there that they're gonna I think it's called the Litecoin or Libra coin or whatever it may be. Gold and silver has been around for thousands of years, and it will be around for even much more than I'll be alive. But going back into why interest rates are so critical, it's the most important number in an economy. Jerome Powell has been talking about, I'm sorry, not Jerome Powell, President Trump is talking about going back into quantitative easing. And what quantitative easing is, just massive expansion of the money supply. And if you guys know a little bit about inflation by definition, according to the currency school, is expansion of the money supply. So rising prices is just a side effect of inflation, and how we have now Bernie Sanders and a few other socialist candidates out there talking about modern monetary theory. And I've warned about this for quite some time, how it's pretty bad ideas, and if they've been implemented in the past, and if they've never worked. So the way to hedge against this is gold and silver. If you guys know anything a little bit about East Asian currency crisis of the mid-90s, you know that the Thai baht got devalued massively and people started flocking into gold. People bought gold. Like, it's so highly valued because of the properties that it has. It's easily divisible. It's universal. It can't be manipulated. There's only so much gold in the world. You can't create gold out of thin air like you can with other currencies like the dollar and the euro. So the truth is, and it's very controversial, is that gold and silver are money, and that's it. Even JP Morgan said it himself. So when you look at your savings and you only get 1% or 1.25% or whatever, you're not even hedging inflation, because inflation is not at 2%. Inflation is much, much more than that. The government wants to tell you that that our economy is strong and that inflation is under 2%, but it should be higher. What they're really telling you is they want to take more of your money, because they have so many programs they need to implement, and they need more of your money. So going into gold and silver is so critical. And at some point, I will start launching my fund. And I hope you guys realize that my fund will be, the bedrock of my fund will be gold and silver, other noble metals like palladium and platinum, even though those are more speculative. But we start looking into things like REITs, Singapore REITs, and European assets. things that over time will hold its value, and it'll be a long short portfolio. And what that means is that we'll have our positions amplifying each other. At the same time, we'll be going long on your foreign assets. We'll also be shorting U.S. equities, and especially things like Uber and Lyft that have not performed well, even after even their IPOs are not that great. But we see a double top in the markets in U.S. equities, and to me that's indicative of a falling economy. But everyday economists like Paul Krugman and Joseph Stiglitz won't admit a bear market until it's 20% off its highs. But we're not going to wait that long. We got to short the market now. We got to go long these equities and buying gold and silver. Gold and silver right now, specifically, we're at strong resistance. With gold, we're at $13.50. And with silver, it's about $15 an ounce. So at some point, they'll break resistance and it'll be the new floor. And once that happens, I don't see another resistance to $1,900. So why wait till it hits $1,900 when we can go in now and start buying physical gold and silver? Specifically, buy from a reputable company like Shift Gold or Gold. I'll put a link to a couple of these companies out there. But if not, you can actually go into a gold money account, which is you deposit money into a specific account, and it translates your dollars into gold. So no matter the value of your dollars, it'll still hold up because it is pegged to gold. But I just want to thank you guys for listening. This is Austrian Hispanic, and I hope you guys have a wonderful Father's Day.